Hey folks, and the week that was ending September the 5th, and a lovely day in Brisbane. Anyway, okay, what have we got? The old boy Buffett turned 95 during the week, so I don't know if he's got another 95 in him, probably another two or three. But it will be interesting to see what happens when he passes away, actually. But anyway, let's not start off on that note. Righto. Okay. The Chinese market is going up. There's plenty of leverage being applied. It's up 35% year to date. The Chinese government is sort of stoking that. So you've got to be a little bit careful there when governments get too deep into trying to prop up stock markets when the real value is probably less. Anyway, just something to keep your eye on. Um, the Australian economy is sort of just motoring along again, or rolling along. It's about the economic growth figures came out. Everyone sort of got excited. I think it's now 1.8% per year, which is not exactly knocking it out of the ballpark. But there's certain aspects that look promising. It won't surprise you to hear me say that I'm concerned about the property market. Um, we have to wait and see a little bit further what Albo's 5% deposit does. I've sort of looked at it a little bit deeper. It, I don't know, it looks crazy to be quite honest. I think house prices may go up because of it. I'm not exactly sure. I think house prices are rising anyway, so you can't exactly say there's a strong correlation between Albo's 5% deposit and increasing house prices because they're already increasing anyway. Anyway, we'll see what comes of that. One thing that I've given more attention to the last week is US property market. We'll go into that a little bit further on the podcast, but that's looking a little bit iffy. So we'll keep an eye on that. That could be a catalyst for change, mainly because it's a fairly big part of the US economy. So we'll see what happens. We'll see what happens there. There was also a little bit of again bubbly talk about the Australian stock market. The earnings announcements came out during the week. It's always the same. Some were good, some were spectacular, and some were awful. So if you're index investing, that sort of washes out generally. So things are not too bad overall. Again, the ASX has had a very good run since Liberation Day in April. So it wouldn't surprise me to see if we come off a little bit as the traders take profits. But however, I still think we might do all right into the end of the year. But don't talk about predictions. Okay, lesson of the week. One thing I've got up here is the comparison between compounding and drawdowns. What you hear a lot of people talk about is compounding, and it's always positive rather than negative. All I'm doing here is showing you that when you get, if you have a look on the right-hand side there, when you get a big return, but the next year is a big fall, up 28, down 27. Down 27 means you've got to go back up about 35. But the overall point is on the steady portfolio, which is what we always aim to show you to do. That's why we talk about not losing money. What you see is the average return of the volatile portfolio is higher than the steady portfolio, but the steady portfolio's compound growth rate, which is the one you want to talk about when you're talking about compounding, is actually higher and you end up with more money. Now, the reason why that is because you're not losing a lot of money in the steady portfolio. And to bring it back to what the old fella said who turned 95, Buffett, that's what he looks for. He looks for this consistent rise rather than big spikes up and big spikes down. So that's why we've been talking about over the last sort of 6 to 12 months about trying to reduce the volatility in our portfolio, because then it just has this nice sort of incremental movement up. It's not exciting. Steady doesn't give you, images of sitting on the beach in the Bahamas, but it definitely works. And the longer you do it, the better your returns will be. Anyway, that's it this week, folks. folks, we'll see you hopefully on the podcast. Cheers, folks.